What's up, everybody? It's Stas here. Welcome back to another video. As you guys read on the title of this video, I just wanted to go over how you can beat the odds and become a consistently independent trader in the stock market. So for those of you guys that do not know who I am, my name is Stas and I've been trading in the stock market for about 2 years now, and I've been investing in the stock market for a total of 4 years. So when I was 18 years old, I opened up my Fidelity brokerage account and I started investing in blue chip companies and started investing in a long-term portfolio, long-term strategy. Then 2 years after that, when I was about 20 years old, is when I started dabbling with short-term trading, swing trading, day trading, and things that I've been documenting on my channel. So for those of you guys that are interested in things like that, feel free to drop a like, leave a comment, and subscribe. And let's talk about how to become a consistently independent swing trader, day trader / trader in the stock market. So if you guys have been involved with trading in the stock market, you've heard the odds, you've heard this saying that 90% of traders are going to fail while the other 10% are going to be consistently making money over time. And by this, guys, the 90% that start trading in the stock market, swing trading, day trading, why they fail, in my personal opinion, is because of lack of discipline, lack of emotional control, and lack of sticking to a plan. You see that on my channel, guys. I preach sticking to a plan, which is setting a stop loss, understanding how much money you're willing to lose, understanding how much money you can make on each trade, and sticking to this plan, guys. So let's say you buy a stock, and let's say you don't want it to go below a certain amount of price, certain amount of share price, dollar price. You cut your losses, right? People that don't cut their losses are part of that 90% that don't consistently make money in the stock market. Because let's say you take a $3,000 position, for example, and then it goes down about 10-15%. A disciplined trader wouldn't even let that happen, because if it goes down 10-15%, you're already in the hole, right? You're already 10-15% in the hole on $3,000, right? But a smart trader would have just cut their losses and focused on the next trade that they could have made money on, because you can't win every single trade. And that's what I'm going to talk about in this video. And to branch off a little bit more on that, guys, not only are you down 10-15%, but if you're in this position, and this is how I was when I was a beginner trading in the stock market, and this is why I can tell you guys this, because I've actually been through this. If you're down 10-15% on a trade, that means you want to hold on to it and hope that it goes up. That is another losing strategy, losing way of thinking if you're going to be a successful, or if you want to be a successful swing trader in the long run. That's why you have to cut your losses at 2-3% or whatever percentage value that you deem fit for that particular trade, and move on to the next trade. Put that money into another investment, another ETF, another stock, in order to grow that amount of money, right? Because if you're just bag holding, guys, if you're just holding a stock, for those of you guys that don't know what bag holding is, just holding a stock while it drops down 20, 30, 10%, that's not a good strategy, because you're holding that money in that stock, and all it's doing is losing value while you're just hoping for it to go back up in price. That is a losing strategy. So instead, guys, I like focusing on maximizing my wins and minimizing my losses. By this, I mean, obviously, you're not going to win every single trade in the stock market. And by win, I mean make money on every single stock. So what you want to do here, guys, is maximize your gains and minimize your losses. This may seem very, very simple to the beginner out there, but it's truly not as simple as it sounds if you're actually trading in the stock market, physically putting your money, hard-earned money, in the stock market. So what you're going to be doing here, guys, is pretty much the stocks that you win, make sure to maximize the profit on that particular stock. Let's say you put a $3,000 position into a particular stock and it's up 5 to 6 to 7, 8%, right? You have to understand where the percentage threshold is that you want to take your profits at. Let's say you want to take profits at 6 to 7%, and that's where you maximize your profits. You take your profits there, right? And that's how you're going to win 51% of your trades. And then when you're down on a position, let's say 2 to 3%, that's where you cut losses, and that's the 49% of the trades that you end up losing. And that's how you become a successful trader, guys, over time. It may seem very, very simple, but once you put it into practice, it becomes harder, and you realize that it's more of an emotional discipline. Because when you invest in a stock or an ETF that you think is going to go up 5 to 6 to 7% in the next coming days as a swing trade, and it doesn't end up going your way, right? It ends up going down in price. your first initial reaction, or at least this was what my initial reaction was when I was a beginner, is to just hold it and hope that it goes up. Like I mentioned earlier in this video, that's a very losing strategy. That's how you lose in the stock market over time. You have to be able to cut your losses, focus on maximizing growth on the winning stocks that you pick, while minimizing the losses on the losing stocks you pick. Pretty simple, right, guys? So you want to focus on 51% of your trades being successful and maximizing the growth on those particular trades, while just minimizing the losses on the 49% of the trades that you end up losing. Pretty simple, right, guys? So that is what I want to focus on for those of you guys that are beginners in the stock market. So to put this into perspective for you guys out there that are beginner traders, let's say you take 6 positions throughout the course of a week, throughout the course of a 5-day trading week. And let's say you make 6% on the 3 trades that you win. Let's say you make 6% on each of those trades. If you multiply that by 3, that's 18% gain on the winning trades that you picked for that week, right? And the other 3 trades, let's say you lose on those 3 trades. You pick stocks, they go down initially, and you cut losses like I recommended earlier in this video. So let's say you lose 3% on each of the trades that you lost on. So overall, throughout that course of the week, right, you're up 18% because you made 6% on the 3 winning trades, but you're down 9% because you cut losses on 3 of the losing trades at 3% each. So overall on that week, guys, you're up 9% on the week, right? You see that you maximize your gains at 6% for the winning trades, but then you cut losses. You were an emotionally stable investor. You saw that the stock was not going your way, and you cut losses at 3% for the losing trades. And that's why overall, guys, you're up 9% on that week, and you're consistently growing your account. And over time, that is how you're going to become a successful swing trader. So if you guys enjoyed the video, feel free to drop a like, leave a comment, and subscribe. There's a link down below to my Instagram page if you guys want to follow me on there as well. I post all my profits, updates to my channel, personal life, motivation, things like that. So feel free to follow me if you guys want to. If not, that's cool too. So I hope you guys found value in this video. Let's make some money today. Keep chasing your dreams, guys. Peace.